Hello everybody, it's April 8th, 2022. Let's take a look at Bitcoin's action over the week. Before we do that, I want to go over just what I said here on Monday in the little summary. Too long didn't read. We are on track for 51 to 53 as long as Bitcoin stays above 44.2. So, obviously, since then, we have gone below that 44.2, and I have stopped out of those longs. I'm back to being mostly in the bear's favor, to be perfectly honest. So if you remember, a couple weeks ago, a week ago, whatever it was, as Bitcoin broke 45.8, I moved into a more neutral viewpoint, considering this was a very choppy pattern, but above 45.8 kind of took away the immediate bearish scenario, right? So this was the high I was looking at, 45.8. Once we broke above that, we took away the immediate setup for bearishness, which was what was setting up here, right? So we got above that high and eradicated that. Now, I said I moved neutral. I did not get bullish at that time when we broke 45.8. And I still warned the entire time this may be turning into a much larger WXY pattern, and we may still see a new low below 33K. I do view that still as a possibility, and now I view that as probably the most likely scenario. I give it maybe 60-40 to the bears, 70-30 to the bears, maybe something like that. There is a bullish alternative, but it's not pretty, and it never has been. Even as we went up above 45.8, I said at the time, this is not the foundation that we want to see for a bullish move to build off of. It was not a strong foundation, and obviously, I mean, this move down has proven that, at least. At a minimum, this move down has proven I was correct in saying the foundation is just crap, right? We cannot have a strong bullish move built on that. So anyway, let's zoom in and look at what I was looking at on Monday. So initially, back here, this is the action I was looking at Monday here. We had what looked like a fairly decent 5-wave impulse off of the low, and that's when I turned short-term bullish because it looked like we could potentially be making this diagonal upwards or even pushing higher before we go down. 52K was my new line in the sand for bullish continuation versus still seeing a lower low form. So we would have needed to see this continue upwards into this red box if the bulls wanted to prove the bottom was already in. Obviously that hasn't happened. So when I saw this impulse form, I said this area right here is a really good buying opportunity. I had buys hit here, I had further buys hit here, and then we were looking for this to give us continuation upwards. The failure that we saw from there obviously proved all of that to be incorrect. And so I stopped out, and that's fine, right? Trading, you're never going to be right 100% of the time. If you think you are, you're doing it wrong. You need to be prepared, and so I was prepared by having my stop here. So I lost a couple percent on my portfolio on that long, but it was a really good long setup. So, it happens, right? Now, we had a secondary scenario fail as well. So initially, I was looking for this to be an impulse up, right? Failing that, I was then looking for this. The next bullish scenario would have been this is 1, 2, 3, 4, and 5 in a diagonal, and we failed that now as well. So we have two pretty big failures from the bulls to capitalize on what could have pushed us up into the 50K region. So the question is, what is the expectation now? And at this point, we really don't have clear information, which shouldn't be a surprise because all of this action has just been absolutely awful. And, really, really just choppy crap action, right? So we've got a couple different things to look at. Let's go over Let's go over the bearish scenario first, because I already have that drawn, and I'm going to delete it, or delete the fibs anyway, once I go over the bull scenario. So the bear scenario, most likely, this really is not pretty. I have to say, it's not a pretty impulse, but most likely this would be wave 1, wave 2 in a bearish scenario, right? And so we'd be pushing down into wave 3. Wave 3 should take us to the 1382 to the 1618 right here. So you can see that's where we're kind of finding some support right now. Based on how far this move went, I would expect this to push down a little further to the 1618 at a minimum, which is 41.3. So I do think we'll see some continued selling there into that region. From there, the expectation would be for a fourth wave to come up to about this area here, although it's certainly possible that we just do some sideways action and then die. It doesn't need to go that high. But potentially fourth wave up into that region, which would be a pretty decent short opportunity then for the fifth wave down. And the fifth wave down would expect to go to about 40K based on this. Now, any of this can change if third wave extends or truncates or whatever. All of that can change. And like I said, it didn't start off as a beautiful impulse anyway. And so, using these targets are really just kind of guidelines along the way. But if we can get a 5-wave move of any description, even if this comes down, 1, 2, 3, 4, comes up too high, and 5 goes down like that, we then have a diagonal downwards. That's still bearish, right? Anytime we can see 5 waves in a direction, you would expect continuation in that direction after a bounce. So that's what I'm going to be keeping my eyes on basically as we go forward. If this does fully play out, we then have 5 waves down off of the high once again. And the expectation, like I said, would be to see a bounce from there and then a further push down for the third wave. And then, another bounce and then a push down for the fifth wave. And this, if we get rid of this orange fib here, we can this is all pure conjecture at this point because 5 waves haven't even played out, but let's just guesstimate that we go there and then bounce to here, somewhere in that region for a first and a second wave. We would then be looking down somewhere in this 30K, low 30K region, based on something that looks like that, right? We'd see 1, 2, 3 to about 33, 4, and then 5 could push us down to about 31.2. Obviously, that can all change based on where this actually goes to. If it goes further, if this comes lower, it can push us down into that 28K region pretty easily. But basically, my expectation this entire time has been to just break 33K because the macro picture looks like we need one more leg down, and we haven't gotten it yet. And that's why I've got my orange count here. As 4 and then 5 is still, at this point, my primary expectation. So that's the bearish viewpoint. Let me just change this over to orange as sort of the more primary. So this is within this orange count, basically. That's the start of that first wave of wave 5 as a potential. All right. And so, like I said, obviously we're hitting sort of the top of that support zone. So we could see a bounce here at any point. We certainly could see it come up there a little bit, but I'm not expecting too much from it based on the current action. Okay, let's talk about a couple things. Okay, first thing, if you remember back in February, I was looking at this again, as I said, off of the low, the 33K low, we had crap action off of that low. It was an ABC up. And so the only bullish alternative that I saw was that this would hold as a diagonal for a 4 and a 5, right? And if you remember back in February, as it was breaking down there, I began shorting, right? It broke down out of the diagonal. I shorted it here for this fourth wave and wrote it down. Additional shorts, so because I was already short from 49 as well. So anyway, just take a look here at what happened though. After this diagonal, potential diagonal broke, we made a beeline, basically. Almost no bouncing at all, right? Very little bounce. Here's a tiny bounce before pushing down to that final resting point there around 34. So, you know, we're seeing a similar situation here, breakdown of a diagonal. Is this just going to go? That's why I said 4 doesn't necessarily need to go very high. It could just continue breaking down, right, before we finally get a bounce. So there's no guarantee that we're going to get like an entry here for a short. So just keep that in mind. But regardless, you know, when I stopped out at 40 below this level here, 44.2, that basically means I'm back in cash. So it doesn't really bother me at all where this wants to go. I'm sitting on cash. I'm ready to take whatever opportunity comes, and you know, it's not bothering me at all. I'm not losing anything by Bitcoin just dicking around here for a while. Does not matter to me. So that is what I have been recommending to members as well, is, you know, cash is king right now. Like this, the action in the crypto market is just absolutely god awful. It's some of the worst action I've ever seen, to be perfectly honest with you. There's not a good high probability trade in either direction to be had. This looked like, you know, it might have been, and then it failed. And we've seen that time and time again. We had high probability short right here, which started working and then went up and stopped us out. You know, same thing here. It started working, but then it reversed. So it's just a whole bunch of chop action, and you really cannot trade this effectively unless you're scalping super short time frames, and you know, you've got to be good at doing that and know what you're doing as well and manage your risk appropriately. All right, anyway, let's move on to possible bullish scenarios. Let me delete this diagonal. Possible bullish scenario. Okay, so basically this right here, this ABC in wave 3, is still the only possible bullish scenario that I see. And we don't know exactly where this purple diagonal is going to end up. It really depends on where the C wave goes. So right now, the macro expectation for this based on A and B is likely somewhere in this region right here for that C wave, somewhere in the 52 to 58 range in a bullish scenario, right? The best way that it could have gotten there is for this to have played out as an impulse or as a diagonal. Either way, that would have been the best case for the bulls to get there. Because we've failed, I can't put much faith in it, and the best case now is that instead of this being an ABC, it would have to be a WXY, which we do see, and basically it's made up of 3 wave moves in every single leg. So it could be a WXY. Let me put this in red because we have another Y up there as well. Yeah, so this is actually a WXY within that WXY. It doesn't even mean anything super bullish in the long run. This is getting so convoluted, guys. I'm sorry. Okay, let me try to explain the best that I can. This WXY could go there. It could end here. This might just be the end of Y and 4 already. If this goes higher, Y in orange and 4 in orange and 5 in orange is not invalidated, even if it goes up higher. It would be less likely if it went up here, but let's for now move this WXY down because I'm leaning more towards the bear case where we are going down for this wave 5 now. Okay, I'm trying to be clear here, but I understand this is getting quite complex. So anyway, this red WXY is in reference to this 3, because within that third wave, if it is going to go bullish, we would need to see something like that, and it needs to get up into this red box. This red box is gone now. That was based on the impulse that failed. So we're going to get rid of that. So this is still the box the bulls need to reach. And when or if they reach it, then we tag the top of this channel to that third wave. Wherever it ends, that's where the channel goes. And then this gets tagged down here to the bottom of 2. And then it would need to hold a fourth wave at the bottom of the channel and then push upwards for a fifth wave. And none of this is really even bullish in the long run anyway. It may be the top of the bull run at that point and just die. It may be setting up for another run. Really cannot say at this point in time, but it's not good action. All right, but that's the only bullish alternative. This is literally the only bullish alternative. 1, 2, 3, 4, 5, which, as you can see, is just continued chop annoyingness, right? Up in the 50Ks, back down into the mid 40s, then up into the mid 60s, and then break down from there. And what happens after that, I couldn't tell you. That's the bullish alternative, and it's not a good one. So once again, I'm back to rooting for the bears, because if the bears can break this low, if we can just break it, get rid of it, we can ignore all of this. I can ignore all of that action. We can complete a fifth wave, and we can start anew, which is what the bulls need, because this is not a good foundation, right? They've built on a foundation of sand, and we need to just demolish the sandcastle they built and pour some concrete with an impulse. If we pour some concrete foundation with an impulse, I will happily buy, and we can happily start the next move up from there into the 100K region. Okay, and the only way that we can do that is by breaking the 33K low and allowing the bulls to start over. Now, if we break 33K, is that bullishness immediately? No, of course not. The bulls need to prove themselves, right? If we see this tank down here, can it completely just keep tanking? Yeah, of course it can, right? But if we hold in that region and do an impulse, that is proof of a bottom, and it's a strong foundation to build on for the next leg of the bull run. All right, so at the moment, macro support still remains in this big green box. This is based on the daily chart. Macro support essentially for this fourth wave, because I still think we need a fifth wave up, which should go to 100 to 130. We still need that, right? So this is support for that region. But again, the micro action just needs to be erased. All of this micro action needs to be erased by breaking to a new low, so the bulls can actually try and hopefully succeed off of a new low, potentially in this 28 to 30K region, maybe even down as far as 25. We'll see. All right. Trying to think if there's anything else that I can say right now. Not really. That sums it up as best I can. You know, if you take anything away from this video, just summary-wise, the bulls have failed. The bulls have failed every setup that has been granted to them so far. But so have the bears. I mean, this was a good setup back here. So at this point, I mean, it is just meaningless chop, but I am leaning towards the bears based on the bulls failing their most recent setups. I think that's the best way that I can put it. So if we can complete these 5 waves down, I am then very bearish. Right now, I'm slightly bearish. Certainly not bullish, right? If we complete those 5 waves down, I'll be very, very bearish and looking for a new low below 33K after that. If somehow the bulls get it together and they break above, at this point they need to break above 48.2, you know, break those highs essentially. If they break those highs, then it's likely going up here into this region, 52 to 58 from that breakout. And it may or may not be completing a third wave. It's very possible still, though, that this is just orange 4, an extension on orange 4, and we still have another leg down. So, you know, the bulls really have their work cut out for them. Even in that bullish scenario, it's not great. All right, everybody. Hopefully that made sense. I'm actually pretty sure a lot of it didn't make sense if you're not familiar with Elliott wave theory. But this is the best explanation that I can have for something that is just awful action, to be honest. We're trying to assign rationality to choppy action here, and a lot of times that's an exercise in futility. So I'm pretty happily just kind of waiting at this point, waiting for a more clear setup, and I have no interest in playing with this choppy mess right now. And I think that's the most important thing to take away. So, all right, that's pretty much all I've got. So take a look at the macro view here, suggested video of how I see Bitcoin going to 100 to 130 as a possibility. And please, if you haven't yet, hit the subscribe button, hit the like button. I appreciate it. All right, good night, everybody.